Just weeks before Argentina's pivotal midterm elections, the United States, in coordination with the Treasury Department and the IMF, pledged a staggering $20 billion credit line to Argentina. This wasn't just another bailout, it was a high-stakes intervention to stabilize a faltering economy and reinforce a controversial ally. The timing was deliberate. President Javier Milei, the anarcho-capitalist outsider, faced his first major electoral test with the outcome uncertain. The fund sent a clear message. Washington was betting big on Milei's radical economic experiment. Argentina had been teetering. High inflation, a battered peso, and social unrest from harsh austerity. The U.S. Treasury statement spoke of supporting market reforms and regional stability, but the real message was unmistakable. America was backing Milei to cement its influence in a region where China was gaining ground. The announcement electrified Argentina's political scene. Opposition parties called it foreign interference. Milei's supporters saw it as validation. For ordinary Argentines, the news brought hope and skepticism. They'd seen foreign rescues before, often with painful strings attached. This was about more than money. It was a geopolitical chess move, signaling U.S. commitment to a pro-Western free market government in South America. The decision marked a turning point, not just for Argentina's economy, but for the balance of power in the region. The question, would this massive bet finally break Argentina's cycle of crisis, or was it just another chapter in a long, troubled history? The world watched as Argentina's fate and the future of U.S. influence in Latin America hung in the balance. The stakes had never been higher. For Milei, it was a chance to prove his vision could succeed where others had failed. For Washington, it was a test of power, ideology, and resolve. To grasp the stakes, you have to understand Argentina's history, a cycle of boom, bust, and broken promises. Once among the world's richest nations, Argentina's golden age was built on shaky ground. The panic of 1890 exposed its vulnerability to foreign debt, setting a pattern of dependency that would haunt it for generations. The rise of Perón brought industrial protectionism and social welfare, but also chronic deficits and runaway money printing. Economic mismanagement and political patronage led to inefficiency and corruption, isolating Argentina from the global economy. The late 20th century saw chaos, dictatorship, democracy, and hyperinflation that destroyed savings and trust in the peso. The trauma of currency collapse left Argentines desperate for stability. The 1990s convertibility plan pegged the peso to the US dollar, ending inflation and sparking a boom, until the rigid system shattered in 2001. The collapse wiped out savings, closed banks, and plunged millions into poverty. Each attempt at reform brought hope, then heartbreak. The scars of crisis run deep, fueling cynicism about every new promise of stability. Argentina's economic merry-go-round has left its people wary of both bold experiments and foreign lifelines. The question now, can Milei's radical approach finally break the cycle, or is Argentina doomed to repeat its past? Enter Javier Milei, a TV economist turned political firebrand wielding a chainsaw at rallies and promising to slash the state. In 2023, he won the presidency on a platform of shock therapy, dollarize the economy, abolish the central bank, and gut government spending. Milei wasted no time. He devalued the peso by over 50%, halved government ministries, halted public works, and cut subsidies. The goal: zero deficit, no more money printing, and an end to chronic inflation. The results were immediate. Monthly inflation slowed, and Argentina posted a rare budget surplus. But the pain was severe. Prices soared, poverty spiked, and Milei's approval ratings fell as austerity hit hard. His plans for dollarization stalled. Argentina lacked the dollars to back its currency. Milei's confrontational style alienated Congress and united the opposition. Unions called strikes, governors rebelled, and the chainsaw revolution met fierce resistance. The question, could Milei deliver stability before public patience ran out? The stakes were nothing less than Argentina's economic survival. The world watched as Milei's radical experiment faced its first true test. Would shock therapy cure Argentina or break it? By late 2025, Milei's initial optimism had faded into anxiety. Fiscal surpluses masked a deep recession, industry stalled, construction halted, and consumer spending collapsed. Inflation slowed, but families struggled to afford basics. The peso's official rate diverged from the blue dollar, signaling eroding trust and draining reserves. Dollarization seemed out of reach and the reform project teetered. The IMF, Argentina's largest creditor, grew uneasy, urging Milei to soften austerity and build consensus. Protests erupted, markets panicked, and the risk of default loomed. The government was losing control and the specter of another crisis returned. The stage was set for outside intervention. Argentina was on the brink. Again. Would help arrive in time? With Argentina on the edge, Washington intervened, not with a simple bailout, but a strategic rescue. The $20 billion package included a Federal Reserve currency swap to bolster reserves and IMF funds with explicit U.S. backing. The message: America was all in on Argentina's recovery. Conditions required fiscal discipline, but also pragmatic tweaks, more social safety nets, a softer monetary stance. The timing, just before midterms, was no accident. It aimed to restore confidence and halt panic. For Milei, the rescue was both lifeline and leash, saving his government, but tying it to Washington's expectations. The radical outsider now depended on U.S. goodwill. The intervention pulled Argentina back from the brink, but shifted the balance of power. Milei's revolution was now inextricably linked to American interests. The rescue bought time, but at a price. Would it be enough to change Argentina's fate? Washington's move wasn't just about economics, it was a shot in the new Cold War with China. Beijing's growing influence in Latin America, especially in Argentina, had alarmed U.S. policymakers. China financed infrastructure, bought Argentine exports, and deepened economic ties. Milei's election reversed this trend. He froze Chinese projects and pledged allegiance to the U.S. and Israel. The $20 billion rescue was a geopolitical investment, anchoring Argentina in the Western camp. Stabilizing Milei's government was about more than markets. It was about blocking China's advance. Argentina became a critical square in the global chess match. The U.S. was determined not to lose it. The U.S. intervention calmed Argentina's political storm. Panic subsided, the peso stabilized, and Milei's coalition outperformed expectations in the midterms. The narrative shifted from collapse to survival. Milei's team, nudged by Washington, adopted a more pragmatic approach, compromising with opposition and toning down rhetoric. The opposition, robbed of its disaster argument, struggled to regroup. The Peronists remained divided, unable to mount a serious challenge. Yet beneath the surface, tensions simmered. Unions opposed labor reforms, governors fought for funds, and millions remained in poverty. The U.S. rescue bought time, but didn't erase Argentina's deep divisions. The peace was real, but fragile. The future depended on whether Milei could turn reprieve into real reform. The clock was ticking. Would Argentina seize its chance, or squander it? Once again, Argentina stands at a crossroads. Is this the moment the cycle finally breaks, or just another temporary fix? Optimists see Milei's discipline and U.S. backing as a unique chance for lasting change. They argue only radical surgery can cure Argentina's chronic ills. Skeptics see déjà vu, recession, poverty, and foreign debt echoing past failures. They warn that austerity can't last in a democracy, and backlash is inevitable. Ultimately, Argentina's fate rests on its people's resilience and Milei's ability to build consensus. The U.S. has made its bet, buying time for reform. The world is watching. Argentina is holding its breath.